Okay, the main benefits for the US, the EU and the UK will be that arising from an increase in trade that must take place with the reduction of tariffs and the harmony of regulations, there will be a substantial increase to our economic growth, and that has been variously estimated as something like 90 billion per annum for the US, 120 for the EU, and over 10 billion for the UK. Now, that's a substantial improvement in our economic performance and will be reflected in rising standards of living for every member resident in those countries.
So in terms of the pace, current pace of negotiations and how long it will take to do a deal, I do believe a deal is attainable, will be done. I think the timetable that the negotiators have set out, which is for 2015, 2016, the American administration, the Obama administration talked at the beginning about doing it on one tank of gas. I think that's attainable. The trick will be to package up what has been agreed at a given time and to declare victory. And I think inside that you'll see a combination of immediate effect deliverables and some things that kind of live in roadmaps. And particularly in the roadmaps, they will sort of envisage processes of delivering things, regulatory convergence in sectors, chemicals, cars, whatever, that will take a bit longer, but they'll be able to be captured in an agreed deal that can and probably will be signed in 2015, 2016.
Originally, the Americans said they would want to do it in one tank of gas, and EU were hoping to have completed it by 2014. However, given the current pace of negotiations, I think we'll be lucky to get it done by 2016. And obviously, we want it done by then because the presidential election, and if there are a change of presidency, we don't really know what would happen afterwards. I think a referendum in Britain on EU membership is going to be a drag, and what has been made quite clear both from the deal that has been done with Canada and from the noises we're getting from, if you like, well-positioned people within the American negotiating process, that basically Britain is too small on its own to be worth all the, shall we say, hassle of going through this process, and they're only interested in doing it with the EU to capture the scale of market which is necessary for the EU and the US together to hold a significant strategic domination in the world economy. They're not interested in doing little deals with what, quite frankly, would make us a little country in this context.
Again, TTIP may have been negotiated certainly after an EU referendum, before an EU referendum will have taken place, may have been after a Scottish referendum, so that's a bit of an unknown. But again, I think that the question of UK impacts is potentially modest. Either we'll be in the European Union, in which case we'll have the benefits of TTIP, and I think that any of the three major parties are likely to talk about TTIP in that sense as a plus from Europe, something that shows how Europe can be useful, that its scale as a consumer market can sort of in some way be equal to that of the United States in trade negotiations. And I think they'll paint that as a positive aspect of Europe coming from TTIP in any referendum context. So I think TTIP will be a positive in that context, and if we're not in Europe, we won't get it. So that's quite straightforward. As we know, in terms of the financial services content of a TTIP deal, we know it's currently not in scope for negotiations, despite industry, financial services industry, being in favour of inclusion. Now, the trick will be what kind of financial services content can and should be included. I think there's little or no concern as to market access type issues, and that means sort of establishing financial services businesses. That's something that seems a normal subject matter for a trade negotiation. I could see that coming in, and indeed that's already in discussion. Detailed discussion of financial services rules, something that's been very sort of carefully stitched together in the US and in the EU. I don't see there being scope for negotiating detailed rules or aligning detailed rules in TTIP. But an area that isn't included, but which I hope and believe will be included eventually, despite the US Treasury Department's current opposition, is to really provide some kind of framework for conversations about how these rule systems will dock, if you want, towards what people are talking about as equivalence determinations. And that's not in, but I believe that eventually that subject matter will be included, perhaps not as a financial services subject matter, but as a general sort of regulatory subject matter, which would in turn bite on financial services. So I think that inclusion, yes, eventually, in the packaging of a deal towards the close.
I think that if you look at the progress on areas such as manufacturing tariffs and harmony of regulation, I think I get the feeling that we're further down the line on this, and there is more obvious benefit for a deal and more will to do it. I think the financial services is far trickier, and I mean, in the light of what happened when we had the collapse of the international banking system, it's a far more sensitive issue, and I think that will take longer, and my view is that we shouldn't let the financial services issue prevent us from signing a deal which deals with other areas.